In this video, I want to discuss 10 essential characteristics of blue chip stocks. Blue chip stocks are typically characterized by the following features. Number one, established history. Blue chip companies have a long track record of stable operations and consistent performance. They are quite reliable, they are stable, they have a reputation for steady, solid performance over the years, and they are considered quite resilient when it comes to the impact of the economic environment on the company itself. So they have an established history. Historically speaking, a blue chip company has done well over the years. That is why they are classified under this particular group. Number two is strong financial health. They generally have robust balance sheets. They have strong earning growth. They equally have low debts and a healthy cash flow when it comes to earnings. They have that earning growth regularly. The earnings tend to grow year in, year out, and they have low level of debt compared to their assets. And not only that, the cash flow is enormous, year in, year out. So they are financially strong, they are financially stable, and they have that fortress balance sheet. Number three, market leadership. These companies are often leaders in their industry or sectors with a significant market share and, of course, a competitive advantage or a competitive edge or moat around them. They are very strong. They are leaders in their industries. They are very popular. They have that solid strength competitively in the industry, and of course they are like kings in their respective industries. Number four, dividends. Blue chip stocks often pay regular and reliable dividends, providing income stream for their investors. This particular class of stocks, they are known to provide regular, reliable, consistent dividends year in, year out, as the case may be. So because of the strength of their balance sheet and because of the level of their performance, they can afford to pay these level of dividends on a regular basis. So if you are the type that wants to have income, regular income, you are more concerned about income even more than capital growth, I think it's advisable you invest in a typical blue chip stock. Number five, large market capitalization. A large market capitalization. They are usually, highly capitalized, indicating, a large and a stable company size. You don't find them in the nano cap sector or the small cap sector. No, these companies are highly capitalized. They're in the mega cap sectors, and they are in the the large cap category. So they are highly capitalized with the capital base, in billions, if not a trillion of dollars. Number six, global presence. Many blue chip companies operate in an international scale with diversified global revenue. A typical, and of course, I think the perfect example of a blue chip stock is Coca-Cola. Coca-Cola has an operation virtually worldwide. They are globally diversified. They have that international presence and they have international scale. There's hardly a country in the world you will go without coming across, a bottle of Coca-Cola. It's a very, very typical example. It's a perfect example of our blue chip stocks with a global outreach, global reach, in a large scale. Number seven, consistent growth. They demonstrate steady revenue and earnings over time. When it comes to growth, blue chip stocks are known to provide consistent earning year in, year out. Their earnings, are consistent, and they tend to grow on a regular basis. So there are companies that attract market shares year in, year out. They expand the operation, they are doing very well, and that translates into the very fact that they have a consistent growth in terms of revenue, in terms of profit, and in terms of earning per share, and even cash flow. In virtually all fundamental metrics, fundamental areas, discover that a typical blue chip stock, exhibits a remarkable level of growth. Please like this video and subscribe to this channel. It will do me a ton of good. Number 8, strong brand recognition. These companies typically have a well-known and trusted brand. They have that particular brand recognition, and the brand commands reputation, it commands respect, it commands quality, it commands a kind of, strength. A typical example of a company in this regard, I've just mentioned Coca-Cola. You have companies like Nike, you have companies like Microsoft, you have companies like Sony in Japan, Samsung, and other, global brands like that. They are very easily recognized worldwide because of their consistent performance, their popularity, and the strength and the quality attached to their product. The reliability of their product have given them that particular, brand recognition. They can charge even a higher price on their product because of the fact that their products are known to be qualitative. So they have brand dominance, they have brand recognition, they are very popular, and they are very easily, recognized worldwide. Number 9 is resilience. Resilience. Blue chip stocks tend to be more resilient during economic downturn, showing relative stability in performance. When you talk about resilience, even when the economy is poor, people still drink Coca-Cola. People still they still go to a typical McDonald's restaurant, and so they're resilient. The economy, the adverse effect of the economy, as the case may be, does not affect a typical blue chip company because they are resilient, they are very strong, they can withstand economic downturn because of the strength of their balance sheet and because of the popularity of their product and services. They are very, very strong. And so whenever the economy is doing bad, is doing poorly, I want to maintain they maintain the value of your investments. I will advise you invest in a typical blue chip company. Number 10, lastly, high liquidity. High liquidity. They are generally highly liquid, meaning their shares are actively traded and can be bought and sold very easily. If you're holding the stock or the shares of a blue chip stock of a blue chip company, very easily you can key in a buy order and your broker can buy for you, and very easily you can mandate your broker to sell for you. So that liquidity is always there because of the level of transaction that takes place in these company shares. They have a large share outstanding, and because of their popularity, the stocks of blue chip companies are always active, highly liquid in the market. So you don't have that fear of you want to sell your stock, you cannot sell, or you want to buy, you cannot easily buy. No, such occurrence are not peculiar to blue chip stocks because they are highly liquid. At any time you can buy them, and at any time you can equally sell them. So these are the 10 important traits of a typical blue chip stock.